Question number 6. Preparation of receipts and payment from income and expenditure. Usually receipts and payment given, you prepare income and expenditure. In this illustration it's totally different. Fifth illustration also same model. Okay, just similar to fifth illustration. So we have been given income and expenditure. All other details are given in adjustment format. So if it is being the statement format, it can be posted only once. If it is given in the adjustment, it should be posted twice. Right. Come on. Join with me to solve this illustration. Okay. You also work out along with me as you are aware about the normal balance sheet preparation as well as receipts and payment preparation. Prepare receipts and payment account and also balance sheet on the date as on 31st/12/2024. So opening balance sheet information is not there, not required to be prepared, but anyhow we can prepare that one also for the better understanding. Yes, open the ledgers, concern ledgers and account statements and all. Make it faster. Now, opening statement of affairs, closing balance sheet, income and expenditure account. So not income and expenditure account, receipts and payment account. Okay. Debit side is named as receipts and credit side is named as payment. Now, we'll start posting the income and expenditure account. Here, the following adjustments were made to prepare the accounts. We have been given 4 adjustments for the subscription, 2 adjustments for the salaries. So 4 adjustments we have for the subscription, 2 adjustments we have for the salaries. In subscription, we have been given advances as well as outstanding in the current year as well as previous year. Both salaries we have only outstanding. Here we have only outstanding. Here we have advance as well as outstanding for the current year as well as previous year. General expenses include insurance prepaid to the extent 800. Audit fee due for the year 24 was 3,200. Audit fee paid in 2024, 2,800 for 2023. So we have the adjustment for the general expenses as well as audit fee. So you need to incorporate these 2 adjustments also. The club has the following assets in the beginning: football ground, sports equipment as on 1/1/2024, 31st December 2024. 35,000 worth of sports equipment becomes 37. Maybe 2,000 rupees worth of sports equipment could have been purchased. Such sports equipments after depreciation amounted to, and of course there's a depreciation also. There's a depreciation also. Clear? I'm not sure with the depreciation, but sports equipment depreciation is given here. You can cross-refer in income and expenditure account. Usually depreciation is debited to the P&L account. Instead of P&L account, we have the income and expenditure account. We have the depreciation amount debited in the income and expenditure account. So this amount being 4,000. The club had taken loan 30,000 from a bank few years back, which remain outstanding on 31st December 2024. And on 31st December 2024, the cash in hand also be around 20,000 rupees. Right. So you know that if it is given in a statement or account form, it should be posted once. If it is given as a raw data, it should be posted twice. With the small details, we will now proceed posting that. Requested statements and account opened here. Opening statement of affairs and balance sheet and receipts and payment. Now we'll start with income account to be posted here. So first of all, income account. Is that okay? Here. Now, entrance fee received. Entrance fees received being 2,000. This is what about the income side. Definitely it may be receipt. So entrance fees. 2 entrance fees. No adjustment, direct I can post here. But in case of subscription, we have been given 4 adjustments. So I prepared a separate working note here. Related to subscription, first one being subscription received. Add outstanding of the current year. Less advance of the current year. Less outstanding of the previous year. Add advance of the previous year. The final will be subscription income. Subscription income. Now come on, tell me. 80,200. Where to post this? Subscription income. 80,200. We apply inversely here. Understand? We are not preparing income and expenditure from receipts and payment. We are preparing receipts and payment from the income and expenditure. So we have been given receipts and income and expenditure account, means P&L account details is given. We start with the receipt and arrive the income. Usually we do. But here income is given. You have to find out the receipt and that can be transferable to the receipts and payment account. That's the beauty of this illustration. Apart from that, annual dinner expenses and income. There is annual dinner income. Receipt side, annual dinner income, dinner receipts, value being 15,000. Profit on annual sports, come on, where to show? Profit on annual shows, annual sports. How will you say it's the receipts? Yeah, come on, tell me. Where will this come? So you can assume it may be a part of net receipts. Assumed. If there is any adjustments regarding that, you have to act accordingly. Is that okay? So for example, annual sports receipts being 28,300, payments being 10,000. So balance being 18,300 surplus. That surplus may be in the form of cash. We collected 28,300, we spent 10,000, we have 18,300 cash. But what happens in this case? Why? It's only receipts. So you have got lots of confusions here. It is not going to be added to the capital. What is going to be added to the capital account? Capital fund or general fund? Surplus. This one is the surplus. For each and every small event, annual event you conduct, no. The surplus either it may be added to the capital fund or may be transferable to the income and expenditure account. The surplus is shown here means they have already transferred to the income side. It will not go to the balance sheet. Be careful here. Okay. Receipts being 10,000. Payment for the annual meet 6,000. 4,000 being surplus. In your receipts and payment account, usually what you do? This will be receipt and this will be the payment. Receipt will be shown in the receipt side. Payment will be shown in the payment side. Is that okay? In your income and expenditure account, this receipt may be assumed to be the income and this payment may be assumed to be the expenses. Or the net effect 4,000 may be considered as profit on this especially yearly meet. Okay, any sports meet or any dinner meet. For that there is a surplus. Surplus by organizing this event. Sir, I don't want to transfer that to the income and expenditure account, sir. If it is not transferable there, then it can be kept in the liability side as surplus we have for the dinner meet. This amount can be used for the next year's dinner meet. But here it is clearly stated the profit on annual sports is 18,300, which is nothing but this 4,000. This 4,000 may either come in the income and expenditure account or in the balance sheet. As it is clearly posted in the income side, it will not go to the balance sheet. It will not go to the balance sheet. The original receipts for this dinner meets, annual sports should be here. Payment for that should be in the payment side. But I am not aware about that. So what we can do, what are the receipts maybe after the payment? Net is considered as receipts here. This 18,300 is considered as receipts here. Clear? Now sometimes, as I already told you, annual sports meet, actual amount received being 6,000. Another 4,000 remains outstanding. Then what happens here? Income may be 10,000, expenses being 6,000, there is a surplus 4,000. But what happens? Actual receipt is only 6,000. Payment is 6,000. This remaining 4,000 remains outstanding, will go to the balance sheet asset side. You have to be double cautious. If profit on annual sports given as 18,300 profit net, it represents receipts minus payments. We assume no due is there, everything is collected and collected amount is used for the payment and net benefit is 18,300. The net benefit is not carried forward for the future year, immediately transferred to the income and expenditure account by posting in the income side. You understand? That's the logic. You can post that in the income side. That's how they have done. That's how they have done. We assume the receipts and payment, everything in the form of cash only. Then automatically this 18,300 may be the excess receipts posted in the receipt side of the receipts and payment account. Here. Annual sports receipts. Annual sports receipt. The value being 18,300. With that, we have completed posting the what? Income side items. Income side items. Statement form, no, it should be posted once I have completed posting that. Now we'll go for the expenditure side. Expenditure side. Yes, come on. First one being printing and stationery. Payment by printing and stationery. Value being 3,200. Interest and bank charges. Interest and bank charges. We have been given the loan amount here. The club had taken loan rupees 30,000 from a bank few years back, which remain outstanding for the entire year. Do you have any rate of interest given for this loan? No. If any rate of interest given, then it is a hidden adjustment, as we don't have any rate of interest. Whatever the interest and bank charges you paid will be considered as a final one. So this 1100 being the expenses, payment side. Interest and bank charges. Interest and charges, 1100. Annual dinner expenses. Annual dinner receipt is here. Annual dinner expenses is here. Payment here. Annual dinner payment. Dinner payment. Value being 18,400. Your payment is higher than the collection. Shortage will be anyhow adjusted in the income and expenditure account. General expenses has the adjustment. Okay. General expenses has the adjustment. I put the value here. Second one. General expenses. Okay. 6,400. 6,400. We have been given one adjustments for that. We have been given one adjustments for that. General expenses Okay. So general expenses paid, general expenses being actual expenses. Now this 6,400 should be the actual expenses, not the payment, not the payment. Is that okay? Because we are taking from the income and expenditure account. When you are taking the item from the income and expenditure, it's nothing but income and expenditure only, not being the receipts and payment. Don't get confused. We usually start with the receipts and payment and do addition and deletion of outstanding and advance to arrive the income or expenses. Here in a reverse case, put the value in the last and then calculate in the reverse manner. Salaries, we have been given two adjustments for salaries. Okay, third one. We have only outstanding. Salaries, salary paid, add outstanding of the current year minus outstanding of the previous year. Is that okay? Outstanding of the previous year. The ultimate value being salaries, expenses. Now the salary is 52,500 here. It's nothing but expenses. Should be posted here. 52,500. 52,500. Audit fee, we have been given the adjustment. Audit fee. Adjustment number 3. Audit fee. I'll work out that later on. Audit fee expenses. Expenses being 3,200. I will calculate other thing later on. And honorarium to secretary, nothing stated, only a payment. Honorarium to secretary. Secretary honorarium. Okay. Secretary honorarium. This value being 15,000. Depreciation on sports equipment. Depreciation on sports equipment. Where will it come? Come on, tell me. Depreciation on sports equipment. In your balance sheet, sports equipment, add purchases of new equipment and minus if there is any sale. I hope there is no any sale. Right, minus, anyhow I'll just put the value here, or I can work out here separately as working note number 4. Sports equipment, opening value, add newly purchased sports equipment minus sale of sports equipment if any in that year, if any in the year, minus depreciation of this equipment in this year. Finally, you will get the sports equipment's balance for the year end closing. Is that okay? Here we have been given the sports equipment depreciation being 4,000, the current year depreciation 4,000. Right. Now tell me, how will you show the surplus? Capital fund, what you have in the beginning, with that you have to add what? Surplus. This value being 12,700. Main income, okay. So with that I have completed posting the income and expenditure account fully. Hereafter this is not my botheration. I never bother about this, so I have posted everything. Now I have to start incorporate the adjustments one after one. First set of adjustments is related to subscription as well as salary. I'll just incorporate these set first of all. Yes. Subscription outstanding in the beginning 4,000 rupees. This is opening outstanding. Previous year outstanding 4,000 should be posted twice. Here another one being in the previous year balance sheet, as it's a income receivable, maybe an asset. So outstanding subscription. This value being 4,000. Subscription outstanding for the current year. Current year subscription outstanding 6,300 being the current year asset. In your balance sheet, outstanding subscription. Outstanding subscription. This value being 6,300. Subscription received in advance in the previous year. Advance of the previous year 5,600. In that previous year, it may be the liability. Subscription advance. Subscription advance. This value being 5,600. This value being 5,600. Subscription received in advance on 31/12/24 for the next year, means current year advance, the value being 3,400. As you receive in advance, it's a liability for the current year. So subscription advance, subscription advance, the value being 3,400. And we have been given salaries outstanding on 31/12/23. Otherwise, it's a previous year outstanding salary. The value being 5,200. This being the liability in the previous year. In the liability side, outstanding salary. Value being 5,200. And another 6,800 being the outstanding of the current year. 6,800. And this being the liability for the current year. This being the liability for the current year. So once you start posting from the adjustment item, it should be posted twice. Don't forget to finish up immediately. So outstanding salary. The value being 6,800. Do parallel entry. Do parallel entry. Then we'll go for incorporating this adjustments. Come on. Tell me here. General expenses include insurance prepaid to the extent of 800. Prepaid for the current year should be removed, right? General expenses minus prepaid, minus prepaid. This value being 800. Okay. If you are paying in advance, then this will be your asset. So prepaid insurance. Okay. Prepaid insurance. Value being 800. Prepaid insurance being 800. Audit fees due for the year 24 was 3,200. Okay. For the current year, it is pending. Can you guess this? Audit fee paid in 2024, 2,800 is for 2023. Come on, guess this answer. Let's see. Audit fee. This one is the unique one. Audit fee. Audit fee. Payment. Add outstanding of the current year. Less outstanding for the previous year. The final value is nothing but audit fee expenses. Audit fee expenses. Usually the amount debited in the income and expenditure account is the expenses for the period. So 3,200 here. And that 3,200 is due. Means current year outstanding is 3,200. Clear? Audit fee due for the year 24 was 3,200. As the audit fee for the current year is outstanding, it's a liability. I put the value in the liability side, outstanding audit fee. The beauty of this particular adjustment is always the audit is done when? After the completion of the year. For the year 23-24, the audit fee will be payable only in 24-25. So for the concerned year's audit fee always remains pending. That's a statement. Okay, in your income and expenditure account, you have 3,200 being the expenditure for audit fee. Remains outstanding completely in this year. And what could be the payment? The audit fee of the previous year outstanding could have been paid in this current year. That's the next statement. Audit fee due for 24 is this one. Audit fee paid in 24 being 2,800 related to 2023. It means the audit fee for the 2023 remains outstanding in that year. It means previous year audit fee 2,800 remains pending. This 2,800 is paid in this year. That's the logic. Clear? So after the completion of year only, we go for auditing. So we are not sure what is the audit fee. Yet once we calculate, and it may remain outstanding, payable only the next year. That's the fantastic statement here. I'm going to post all these things here for your better understanding. Make it faster. So here, audit fee 3,200. Expenses, we have taken it from the income and expenditure account. Previous year outstanding will be outstanding in the previous year, like this side. So here, outstanding audit fee. This value being 2,800. And 2,800. Outstanding for the current year 3,200 also posted. The payment, this one is also posted. Outstanding of the previous year posted. Outstanding of the current year also posted. And payment, in your payment side, audit fee. Audit fee paid. This value being 2,800. Previous year outstanding of this one paid here. Current year outstanding is remains unpaid, maybe, and expenses here. Expenses here. Is that clear? So the audit fee case, one of the beautiful concepts, you have to be careful with that. Now, let's now move on to the next one. This part. This part. What are the assets they have? They have football ground. Okay, football ground. We hope this football ground remains with us for more than 1 year, 1,80,000. The same football ground will come in the balance sheet also, closing balance sheet as well as opening balance sheet, without any depreciation, because it's a ground only. Land has no depreciation. Sports equipment in the beginning being 35,000. Sports equipment. Sports equipment in the beginning being 35,000. In the end, the sports equipment being 37,000. Such sports equipment after depreciation amounted to this value. This 37,000 is after depreciation. After depreciation. Now, what about the depreciation? In the beginning, sports equipment value being 35,000. In the end, the sports equipment value is 37,000. Right. So, reverse calculation, depreciation is a minus item. So, by doing the reverse calculation before depreciation, it should be 41,000. Earlier, it was 35, becomes 41. Due to addition or due to subtraction? Due to addition only. In what case we do addition? Only because of purchases. So, this balance 6,000 is assumed to be the purchases balancing figure. There is no any sale. There is no any sale. Is that clear? Purchases involves payment of cash. So, in your payment side, sports equipment purchased. Sports equipment. The value being 6,000. One of the beautiful adjustment. Okay. So, the reverse calculation itself really creates some alertness on understanding this chapter. So, you have to be double cautious here. Clear? With that, this one is also be posted. Let's move on to the next one. The club had taken loan 30,000 from a few years back, which remains outstanding. So, the loan remains outstanding for more than few years. So, we have the loan in the beginning as well as in the end. The value being 30,000 in the beginning, remains untouched in the year end also, loan being 30,000 rupees. Apart from that, on 31/12/24 year end, we have the cash balance rupees 20. So, cash balance will be the asset here, 20,000 rupees. Also, it's a closing balance of the receipts and payment, closing balance, 20. If you tally, then you will get what? Opening cash balance here. This is the missing data here. This is the missing data. This will go to the balance sheet here, cash balance. On telling that whatever the balance you get, you know, that is called capital fund or general fund. This capital fund or general fund will be transferable here. Yes. Finally, if you tally the balance sheet, it will definitely get tallied. Beforehand, we try to finish up posting all the items. Verify whether all the items in the working notes completed. Subscription received 80, 200, 5,600 should be subtracted, 4,000 added, 3,400 added. This is subtracted to get the subscription received value in a reverse calculation. Come on, get me the value. Make it faster. This value, final value, 80, 84,700 will be the receipt. So 75, 75,700. That's why I told you to calculate one after one. Come on, get me this value. You finish up this one. Come on, make it faster. 8,200 minus 5,600. 74,600 by adding 4,000, 78,600 by adding 3,400, 82,000 by subtracting 6,300 with that 75,700. So here subscription receipt 75,700. Sports equipment over. This one is over. This one is over. In case of general expenses, come on, find out that 6,400 minus becomes plus, so 7,200. The actual expenses paid for general means inclusive means that insurance 7,200. General expenses 7,200. Refer to working note number 2. Refer to working note number 1. Refer to working note number for the payment of sports equipment number 4. You have to give the reference also. In case of salary, 52,500 minus becomes plus, plus becomes minus. 52,500 plus 5,200, 57,700. If subtract the 6,800 from here, 5,900, am I right? 5,900 being the salary payment. Salary paid 5,900. Yeah, finish up tallying the receipts and payment. One lakh 24,600. So 1,24,600. 1,24,600. Then your opening cash balance being the balancing figure 12,600 will come here, 12,600. Come on, total the opening statement of trades to find out the capital fund. So 2,31,600, 2,31,600, and capital fund being balancing figure 1,88,000. Transfer here 1,88,000. What is the total of balance sheet? It is 2,44,000. Are you able to get this? Come on, text me. Question number 7. Preparation of opening and closing balance sheet. What happens here? We have been given receipts and payment as well as income and expenditure also. Now our duty is to prepare the opening and closing balance sheet. Is that okay? So receipts and payment as well as income and expenditure. That's all. Some additional information. Come on, join with me to solve this illustration. Opening and closing balance sheet. Opening statement of affairs. and closing balance sheet. Closing balance sheet. From the following information relating to Evergreen Sports Limited, prepare balance sheet of club as on the year beginning, year end. We have been given these particulars here. Assets in the beginning given here. This is as on 1/1/24. This is as on 31st December 24. So we have been given these three assets here. Club ground, the value being 80,000. Sports equipment, 50,000 rupees. Furniture, 10,000 rupees. Should be posted twice. So here, club sports, inner column 80, maybe there may be purchases, depreciation, sale. You have to adjust all those things. So I put the value in the inner column. Sports equipment. See, I have not studied that question at all. I find out what to be prepared here and started working directly using the same logic. So reading the question completely will waste of your time. So it wastes your time because you have to finish up the question in a matter of 15 minutes in your exams. So if you read, then it will be consuming around 2 or 3 minutes unwantedly for that. So be careful here. So furniture. Here sports equipment 50. Furniture 10, subject to some adjustment. Accrued subscription in the year beginning 2000. Accrued subscription. Is that okay? Outstanding subscription in the year beginning 2000. And creditors for stationery in the beginning. Creditors for stationery 1,800. It should be posted twice. So all other things are posted, but what about this one, outstanding subscription? Should be posted twice, right? So you can open the subscription account or the working note and do the addition and deletion like. So that's how you can do all these calculations. These two, to keep this idea in my mind. Okay. Receipts and payment and income tax expenditure. Right. What happens here? Balance brought down in receipt side is nothing but opening cash balance. Isn't it? Cash 8,000. And this closing balance is a closing cash. This value being 9,000. Subscription received 1,800. Subscription received for that year 22,000. Subscription for the next year received being 600. Yeah. I'll keep that subscription pending to be solved later. So let me finish up the rest first of all. Sales of old newspaper 500. Amount receipt will be your income. So transfer to the income and expenditure. It will not come in the balance sheet. Rent received 5,800. Rental income 6,000. What does it mean? 200 being outstanding. So outstanding rent will be your asset. Outstanding rent. Is that okay? You have to guess this way. Entrance fee is 18,000 rupees, but shown in the income side only 9,000. What does it mean? Huh? What's that? Capital. Entrance fee could be of two nature. One is revenue receipt, another one is capital receipt. In case of revenue receipt, will go to the income and the expenditure account. Balance we may assume being capital nature will go to the balance sheet. Entrance fee can be addable with general fund or capital fund or may be kept separately as entrance fee itself in the liability side. Salary is 14,000 but 16,000. What does it mean? Salary is payment 14 but actual salary expenses 16. Another 2,000 remains outstanding liabilities, outstanding salaries. This value being 2,000. Fire, printing and stationery, 3,500, 2,000. What does it mean? You have paid 1,500 advance. So asset, advance printing and stationery. Printing and stationery. This value being 1,500. Fire insurance 2,200, but 2,000. Also advance, prepaid. Advanced fire insurance. This value being 200. You paid in advance. Advertisement 3,000. 3,000 matches, no prepaid, no outstanding. Furniture 4,000. What does it mean? Purchases. You have to add with the furniture account here. Investment 21,000. Newly made asset. So investment newly made. This value being 21,000. New investment made. So all the payments recorded. Leaving the subscription, we have completed all these things. And here depreciations. Equipment depreciation being 7,000. And furniture depreciation being 1,000. And we have been given surplus 7,700. Surplus will be addable with the capital fund in the year end. Capital fund in the beginning. Capital fund or general fund? Capital fund and general fund, what do you get here? I'm not sure what's the value here. One unticked item is there. What's that? 800 rupees. What does it mean? Maybe outstanding. Debited, but there is no any payment. Means outstanding. Outstanding audit fee. Outstanding audit fee. Value being 800. Now let's get back to subscription. In case of subscription, the total receipts for subscription being how much? Come on. 1800, 22 plus 600, 24, 400. Am I right? 24, 400. Clear? Right. I'm going to decode this. Very important. Okay. Let's see. Subscription received at what? Outstanding of the current year minus advance of the current year. If you have, I think we don't have outstanding advance of the current year, so I can eliminate this one. Minus outstanding of the previous year. Outstanding of the previous year. I introduced one more term here. Outstanding of the previous year paid minus advance of the, we have advance of the current year, right? So I adjust this one. Here is 2025 related subscription 600 being outstanding advance of the current year. Should be subtracted. Then minus outstanding of the previous year paid. Okay. Then finally you have subscription income. 24,000 is nothing but received. Then what about this 22,000? No. Received is how much? 24,400. 24,400 being received. Income is 24,000. Current year subscription 24, but current year related subscription received is only 22. What does it mean? 2,000 will be the outstanding of the current year. Outstanding of the current year being the asset. So outstanding subscription. Outstanding subscription. Okay. Outstanding subscription. How much is that? 2,000. 2,000. This is what about the closing balance sheet. balance sheet as on 31st December 24. Clear? Clear? What about the 600? Current year you received in advance meant for the next year. If you are receiving in advance, it's related to the next year. So it's a liability. Advance subscription, it's your liability. This value being 600. This value being 600. Is that clear? Now, 24,400 minus 2,000, so plus 2,000, 26,400 minus 600, 28, 25,800. Then what about the balance? Is it 25? Received 24,400, correct only, no? Current year outstanding 2,000 is also correct. Advance of the current year 600, correct? Okay. Not matching, that's why I am checking here. 1,800 should be subtracted. Good. Okay, remember. What about the previous year outstanding? But how much is collected? What about the another 200? Still remains outstanding. So 2,000 plus 200. Outstanding subscription being 2,200. In that 2,000 related to the current year, another 200 related to the previous year. Two subscriptions were pending. That's why I use the term here, paid. A small twist. Okay, originally previous outstanding 2,000 rupees. We usually think the previous year outstanding is received completely in this year. But in this case, out of the 2,000 of that year, okay, 23-24, still pending in this year also after receiving only 1,800. So the overall outstanding subscription in the current year being 2,000 and plus 200. Okay, so I have given that format here already. In that format, now you can highlight that term here. In case of expenses, outstanding of the previous year, paid. For this only, I have incorporated this illustration. Similarly, in the case of outstanding of the previous year, received. I gave this one in bold letter with capital to make you understand. So this was applied in this particular case. This was applied in this particular case. It's one of the beautiful case. And creditors for stationery. Okay. Creditors for stationery. Is there any stationery related expenses? Yeah. Printing and stationery. Okay. Now you have to adjust that one also. I missed this one. So I'm going to adjust this one. Okay. Printing and stationery payment is 3,500. And printing and stationery 2,000 is paid. What does it mean? 1,800 being the opening creditors and newly purchased stationery being 2,000. 3,800 is the overall amount payable to the creditors. Am I right? Opening creditors for stationery. New purchase of stationery for this period 2,000. So overall stationery expenses are amount payable for the stationery being 3,800. But how much we have paid? Only 3,500. Remaining 300 could be payable in the next period. So creditors outstanding being, okay, 300 rupees. 1,000? No. This is 300. This is what about the creditors for stationery. I remove this one here. Clear? Clear? Are you able to understand? Now, to make you understand, I use the creditors account here. What is the initial balance? 1,800, am I right? If you are purchasing, what is the journal entry for that? Stationery account debit to creditors. So, Stationery account debit to creditors 2000 rupees. Finally, that stationery is transferable to the P&L account like transfer. Then what is the payment made for the stationery? 3000. Then creditors to cash. How much is paid? 3500. Then balancing figure being 300 remains payable, and that is nothing but creditors for stationery. Clear? Clear that you have to be very careful with this. This is closing balance. I hope I have completed all this posting. Now you can simply tally the accounts or sheets. Club sports remains the same value 80, and sports equipment 50 minus 7 43,000. Furniture 10 plus 4 minus 1 13,000. And find out the capital fund here. Come on. The balance of opening statement of affairs 1,50,000. 1,50,000 rupees. If I ask you total, you have to tell me total. Capital fund being the balancing figure 1,48,200. Transfer here 1,48,200. Get me the total and verify the total is agreeing. 1,68,600. 1,68,600. Hope now it's agreeing, right? Clear? Make a note of it. So one of the beautiful illustration, I already told you, know that NPO is actually learning that entire final accounts upside down. So you have to understand this is the logic. You have to understand the journal entries in detail, and then posting to the ledgers from the subsidiary books as well as from journal entry in detail, and then preparation of the final accounts, understanding the depreciation and rectification of errors. After that, knowing the non-profit organization's financial statement. Even you need to study single entry also. These are the first set. If you are master with these set, then you will be master with the fundamentals of accounts. Here, in case of non-profit organization, you are learning everything in a reverse case also. Upside down, right? So if you are master with this one, so you are strong with fundamentals at least. Okay, come on, finish up copying this.